Welcome back to Morning Movers. I'm Diane King Hall, coming to you live from the floor of the New York Stock Exchange. Green light ahead, it seems to be, for crypto and digital assets, with the latest moves on the policy front from Washington for stablecoins. Joining us for insight, we've got Rajiv Sawhney, head of international portfolio management, Wave Digital Assets International. Rajiv, forgive me on your last name there. Let's talk about the latest with regard to the Senate passing the Genius Act, the stablecoin bill. It provides some regulatory framework. You've got essentially Washington on the side of cryptocurrency. It has to go through the House next. But what's, one, your expectation for the proceeding of this bill, and what does it mean for the industry?
Yeah, it's a pretty momentous occasion for the industry, right? Because up until this point, many types of institutions, whether it be banks or corporations, were eager to get into the stablecoin space. But without the regulatory framework or clarity, they were pausing in terms of their activity or willingness to go into digital assets, right? With stablecoins, right? And so this Genius Act is really momentous in that it provides a clear framework in terms of what institutions can do as issuers of stablecoin. And I fully expect that this will pass both, obviously, the House later on. And once it does, I fully expect a number of corporations that have been sort of waiting in the wings to start announcing that they're going to be going into the stablecoin sort of issuance space, right? Even yesterday, we saw rumors of JP Morgan potentially doing a stablecoin on Coinbase's own native blockchain base. So I expect more of these announcements to continue on the sort of tailwind of this new legislation coming through.
What an about face when you think about the perspective that leadership at JP Morgan Chase had once upon a time. I remember when CEO Jamie Dimon likened, I can't remember if it was Bitcoin, but to a pet rock. So certainly a different day and age that we're in now. When you think about the effect for the industry, what does that signal beyond Bitcoin? Does it give more credence in terms of the path and trajectory for, say, Ethereum?
Absolutely. I think, with sort of these, obviously with the regulation, but also with these big institutions that are saying, okay, we're going to put we're putting our hat in the ring. I think what it means is that the industry understands that this is the future, right? And, for a long time, proponents in the crypto space have sort of, evangelized the sort of benefits of sort of blockchain and sort of digital currencies. I think now the industry should understand that this is where the path is going, right? And so for the JP Morgans and other big institutions, I think now they're sort of saying, look, we need to get a part of the program, and it doesn't surprise us, right? We at Wave have been meeting with many institutions that are trying to find their path in digital assets and how to sort of strategize. And I think, in 5 to 10 years, basically, majority of institutions will be using crypto rails or sort of digital ledgers to sort of help do better efficiencies of their processes and transmission of capital and utility.
Rajiv, I'm curious to know your view on this. When the geopolitical unrest began between Israel and Iran, you saw that classic flight to safety, investors moving into gold. But there are those who make the argument, and Bitcoin fell, those who make the argument that, essentially this is like digital gold. Why didn't we see it perform that way?
Yeah, it's a really interesting dynamic where on Friday, with Iran and Israel headlines coming through, you saw a spike in oil, which was expected. You saw a spike in gold, which was expected. But Bitcoin actually fell roughly about 4%, right? It's recovered since, but it's sort of been in this sort of 103 to 109 range for the better part of the last week and a half, 2 weeks. But I think a large part of it is because the nature of the people that are buying Bitcoin is very different than previous cycles. So obviously the BTC ETF was a critical component of that, and so you have big institutions like the BlackRock, essentially, that are buying holding, but you have other big TradFi players that are much more subjective or much more reactive to the macro news picture, right? And so originally it was mostly retail, right? And retail would sort of use Bitcoin as sort of a hedge and sort of trade it as a much more volatile asset. We're seeing the volatility of Bitcoin over time decrease, but also you're seeing that it's trading much in line with sort of the macroeconomic news headlines and where risk is going, which is really interesting.
Okay, let me ask you this about, where do you see the winners? I'm seeing shares of Circle higher today. They had a, blockbuster public debut. So who do you see as the winners in this space, especially with the passage of the expected passage of the Genius Act? Do you expect them to continue to be the leaders, the current leaders to be the leaders, or do you expect, a broadening out of more entrants?
Yeah, I think, the Coinbases, I think, have really solidified their sort of moat in the space. And I think, that their stock will do well in this sort of, in going forward. Circle is an interesting one because you sort of saw TradFi, or sort of the traditional finance world, sort of understand the narrative of stablecoins, and that was really their expression of how to get some sort of exposure and with Circle, right? But if anyone who's actually looked at sort of the the sort of IPO prospectus understands that 50% of the revenue of interest revenue that comes from Circle's business actually is paid out to Coinbase, right? And with this new Stablecoin Act that's coming in, you're going to have the ability for the JP Morgans, as I mentioned, to enter that moat that Circle has sort of tried to solidify, right? And so I expect probably a handful of sort of winners in the stablecoin space. Obviously, Tether is the other one, but in a different sort of regime, not so much compliant with sort of U.S. regulations out at this time, but they're working on it. But I wouldn't be surprised if a big institution like a JP Morgan, et cetera, was able to take sort of that market share from Circle, right? And so I expect maybe a handful of names to sort of cement themselves in the stablecoin space, but then the original sort of companies like Coinbase and Kraken, I think, will benefit from this as well.
Coinbase, though, has, where it is now, it's if you want exposure to, say, the actual crypto assets, you don't necessarily need to buy shares of Coinbase. And that has, for instance, Bitcoin has outperformed Coinbase year to date. Do you think that Coinbase is becoming kind of just viewed more traditionally because it's an equity, essentially?
Yeah, absolutely. I think if you're an equity investor and you don't want to have exposure to a BTC ETF, that's one expression. But you're absolutely right. As more and more of these products get in the hands and accessible by TradFi institutions and sort of, your Fidelity account, et cetera, I think that the things will normalize, right? And so I was surprised, actually, of CoinCircle's sort of IPO debut, to be honest, right? I thought it was probably a bit rich. It's still trading quite decently rich right now, probably no less than maybe half of Coinbase's market cap right now. So I expect as this sort of space matures, we're going to see winners outperform relatively. But yes, I do think potentially there may be some compression as well. Yeah.
Okay, thank you, Rajiv. That's Rajiv Sawhney, head of international portfolio management, Wave Digital Assets International.